Welcome. This is the Market Wrap. I'm Agam Vakil. Strength coming in for the benchmark indices, snapping the 3-day losing streak when it comes to the Nifty, moving up by as much as 97 points, almost 100. And the key gainers, we have GAIL India advancing by as much as 4.3%, followed by M&M up 3.7%, Axis Bank also in the fray, along with several other counters from the metals pack. On the losing end, there's some weakness coming in from the pharmaceutical sector, whereas we have the large weights, Sun Pharma, Cipla, Dr. Reddy's and Lupin all declining to a certain extent, bearing down on the indices. But when it comes to the broader markets, we're looking at 3 gainers in comparison to 2 losers. And in gainers too, we have more strength coming in PC Jeweler. We saw about a 45% gain last Friday and another 38% gain coming in. So a lot of those losses recovered for PC Jeweler. Jayaprakash Power Ventures up 18%, KRBL, IFB Industries and Pfizer among others gaining and advancing by as much as 7%. On the losing end, Himadri Specialty down by as much as 10.5%, Indocount Industries and Walkhard continuing to show weakness, and GVK Power along with Jeevan Financial also losing out in today's day of trade. So that's the broader market picture. We're looking at stock-specific activity once again. But let's bring in our editor Neeraj Shah, who will give us a perspective about what's really going on in the markets. Neeraj, how are you reading it?
Hey, so I've proven wrong, Agam, to be honest. I mean, or my belief rather. I didn't think that the markets would take any decisive moves ahead of the Karnataka verdict. Too soon to call this a decisive move. Let's see if it lasts or no. But I frankly thought that the next few days would be ho-hum, lackluster. Anything but lackluster today. Maybe for the broader markets, yes. But for the large caps, anything but lackluster. And the fact that the Nifty Bank did what it did without support from the HDFC twins spoke about the kind of strength that existed in some of the others, the ICICI Banks, Axis Bank, Kotak Banks of the world. So that was one key highlight. The turnover today was a bit to be desired, both on the F&O side and the cash market side. The participation wasn't the strongest. In fact, the F&O participation picked up meaningfully in the last 1.5 hours of trade. Otherwise, it was looking really somber in terms of the participation in the index, in the markets today. But good move today, surprise move to my mind. Yes, Europe was performing a little, but nothing too great. Asia was its usual subdued self as well. So quite out of the blue, and quite a strong reaction to some stocks post their earnings as well. So Exide, for example, numbers came out in the dying moments of trade, last 20 minutes, and a sharp up move there. We suddenly saw some spurts happening in almost all of the key index names today, which was great. M&M up about 4%, GAIL up about 4%, and a large portion of these moves happened in the last 1.5 hours of trade. So good buoyancy there. Don't quite know if it lasts. I'll be surprised if it lasts, but hey, I've been proven wrong today. Who's to say that I won't be proven wrong over the next couple of days as well? So let's wait and watch. I don't know if the F&O indicators gave you something else, but I was pretty surprised with the rally today. Well,
Neeraj, like you put it, the turnovers weren't that high, and I think that's where we're going to have to wait and watch whether or not we do see some traction coming and eventually give us an idea. Thank you, Neeraj, for joining us and giving us that perspective. But that said, what are the technicals telling us? Here's what some of the technical analysts who joined us on the show today spoke to us about the levels that you can keep an eye on the Nifty. Listen in.
Today's savior single-handedly has been the Bank Nifty. We are probably heading towards 26,126, not in a day or two, but yeah, that's what looks like happening. Nifty, I am slightly at crossroads. Some of the daily oscillators like the MACD have signaled a sell.
Nifty has had a strong run from 10,000 levels to 10,700 in the last 2 weeks, and that's a very good momentum which is showing. I think there's some time for some days it may go into consolidation between like 600 and 700 or 750 before it breaks out above the levels and goes to the new highs around 11,000. So Nifty would be more of, I would say, like a sideways market for the next few days, but at the same time I would say Bank Nifty should outperform and can give a good move at least up to 26,500 because all PSU banks as well as private banks are showing good chart patterns, and we can see a good move on Bank Nifty.
So you can watch out for the levels, but here at Bloomberg Quint, what we're also doing is trying to assimilate the EPS of the Nifty companies. We've had 20 companies announce their earnings, and we have Jayesh Kilnani joining us to give us an idea about the sort of indications that this earnings per share is giving us as far as the Nifty is concerned, Jayesh.
So it's looking like not another great year. In fact, cannot expect a double-digit earnings growth from the Nifty EPS. Now, let's go through what has happened till now. If you look at the FY18 9 months EPS that came in at about 356, and the 20 companies that have reported so far, those companies have contributed 63.3 rupees as EPS. Now if I go by the estimate of the remaining 30 companies, I arrive at a 52.4 rupee EPS. Now if you add all of these three together, you will get a final FY18 EPS of about 471.7. so how does this 471.7 look like on a yearly basis? If you can have a look at that one, the chart will show that for FY18, if we get a 471.7 EPS, it will imply a 8.8% growth, which is not double digit. And in fact, in FY16 and in FY14, we did manage to clock double digit growth for for the entire financial year. So what will it take for the Nifty to actually reach the 10% growth mark or go even beyond that in double digits? If you have a look at FY18, if the EPS is at about 477, that would imply a 10% growth from FY17's 433.7 number that we had got, which means that for Q4 FY18, the quarterly EPS should be about 121, and given that we have done only 63.3, looks highly unlikely that we will be able to cover the distance, given that the expectation is for only 52.4 rupees for the entire quarter of the remaining companies that are yet to report. But the saving grace is, if you have a look at the quarterly trend, 120 or 120 plus on a quarterly basis is not impossible. In fact, for Q3 FY18, we did manage to clock 127.6 rupees. So that's the saving grace. But in all likelihood, looks like FY18 Agam will not see double-digit growth for the Nifty EPS.
Well, something the analyst community may not like as far as the indications are concerned. Thanks, Jayesh, for joining us and giving us those details. But we're also talking about a sector this time around. And we have Nikki Mirchandani joining us to give us an idea about the earnings as far as the cement sector goes. Nikki, over to you.
So cement sector, it was in line with estimates performance for all the pan-India players. I'm going to touch base upon volume, EBITDA per ton and realization growth, these three parameters for these companies. Volume growth has been good for Ultratech Cement. They saw a good 30% jump there, which in turn impacted the kind of performance seen by ICICI and Ambuja. On realization front, we saw sequential growth we saw flattish growth for realization on sequential basis. On year-on-year growth also was pretty much muted in the terms of 3 to 5% odd growth there. That's mainly on account of the kind of depressed pricing trend that we're witnessing across the industry and the regions. Third on the list, we have EBITDA per ton, and this is one parameter where all the companies delivered a beat. But then much of the beat came in, maximum beat came in from Ultratech Cement, but then the least came in from Ambuja Cement. However, there is a bit of cautious note there itself with Credit Suisse coming up and saying that cost pressures of ICICI and Ambuja Cement are expected to yet show up in the next quarter. So you might just see EBITDA per ton growth also being a little moderate going forward for these companies. But then Agam, the key takeaway that I would, we could drive home is volume push and cost optimization measures by these companies have led to an inline sort of performance for cement players.
Okay, so we continue to track more developments with respect to cement. Thanks, Nikki, for joining us and giving us those updates. Of course, I am going to end this particular segment by addressing what's happened to the 10-year government bond yields, and as you can see, the yields have fallen quite substantially, now at around 7.6 in comparison to what we saw yesterday was 7.74. So we've seen a little bit of a drop here. And in terms of the rupee movements, again, I want to address that the rupee has weakened against the dollar, now standing at 67.15, a drop of another 0.5%. But that's what we have in terms of markets, and that's a wrap on the markets. Don't go anywhere. Lots more lined up, so stay tuned in the Bloomberg Print, and we'll keep bringing you more.